unique business, and it has a potential, in my opinion, for it to be valued higher than where it is today. Uh, this analysis is something that is very specific to my style of investing. It is very specific to what I like to look at as numbers, and it may not necessarily apply to each and every one of you. So make sure that every part of this analysis you take it with a pinch of salt in trying to customize it for yourself. If it works out as it is for you, well and good. You can go ahead and do your analysis for other stocks or even this stock in the same way that I have done it. So, if we look at the structure and the topics for the day, uh, one is I want to give a brief introduction of the company as to what the company does, where the revenue stream comes from, what are the predominant business lines that it has, and where I see weightage of a certain business line doing better than the other business lines. Uh, what I think about the company, and at the end of it all, I'll do a stock reveal of which company I have been talking about all this time. If we look at the company and about them, there are broadly five business areas in which the company performs: the network currency management, cash processing, cash vans, cash pickup and delivery, which is the majority of the structure business here, and sorting of soil notes, counterfeit notes, etc., which the banks call back whenever there is an instruction from the Reserve Bank. If you look at the revenue mix, then the revenue mix really talks about from a fundamental standpoint. There is cash pickup and delivery, 67% of the revenue comes from that. The network currency management, 22% revenue comes from that. Cash processing, 5%, cash vans and transit, 4%, and other value added services are about 2%. But if we broadly look at it, the cash delivery and pickup forms a majority chunk of the revenue, and their clients are some of the big private banks, big public banks, which require cash movement from branches to treasuries and treasuries to branches again and again on a monthly basis, on a daily basis, whatever are the services. This company caters to those services, which in my opinion is a very important service in terms of the economic activity around it. If we look at the positives of this company and why I am looking at this particular company in a very pro way for my investing style, is I see some of the very key aspects that get covered here. The first one is that they have been able to generate uh, a CAGR profit growth of close to 60% every year for the past 3 to 5 years. The operating profit margins, which basically what it means is if you have a revenue of 100 crores and if you are able to keep profits about 25 crores with you, then you have a profit margin of the operating profit margin of close to 25%. They have done this consistently for the past 3 to 5 years again. The current P of the company is much lower than the industry's P. Now, to be honest, here the industry P does not matter too much because this is a very unique business. It does not have a very big industry or any other competitive players being available. The third important point, or rather the fourth important point, is this is majorly a monopoly business. There is very less chances that any company can come and start off their operations immediately. Obviously, because there are big banks involved, there's a central bank involved, you have to get various permissions, you have to tie up with various banks, and all these procedures take time. So any competition to enter into this kind of business, it will take significant amount of time from here, is what I foresee for in terms of competitiveness. If I look at the balance sheets, the long-term borrowings are absolutely nil. Uh, there are some short-term borrowings which do worry me, but those are being used as cash credits or revolving credits, which is uh, very important for a business to run. So I'm not really very worried about the short-term borrowings. But if they keep increasing every year, then that is a problematic situation. But that is to be assessed every year when the financials are out. If I look at the cash equivalents I think close to around 170 crores, which is 10 times of what their short-term borrowings are today. So if there is a financial crunch, then cash equivalents are more than enough to cover the short-term borrowings for the company to stay afloat. If you look at the ROCE, the capital employed by the company every year brings back 45% in return for every investment that they are trying to do for the betterment of the company. What this indicates is the promoters' capital allocation is excellent. They do see they are performing, in a very prudent manner by bringing 45% ROCE almost every single year in the past 3-4 years that I've looked at in the financials. They have a positive cash flow every single year for the past 3 to 5 years. Again, no issues on operating cash flows. They have positive operating cash flows, and after the investing cash flows are also taken out, they have significant uh, cash, positive cash flows after the operating, the investing costs that they have. If we look at some of the concerns that I have, the concerns is first off the reduced use of cash in the recent past is becoming a problem, but I don't see that happening in the businesses of India. I don't see that happening, in the business transactions or in a day-to-day business operations of the country, because we still have cash in, cash out. The shops are depositing money, the shops are bringing out cash every day for day-to-day activities, so that is going on. And of course, the branch ATMs, the bank ATMs, the treasury departments, the branches have to be rich in cash because there are cash withdrawals from customers every day, and for which there is required to be a transit between these branches to treasury operations of cash. Although I'll be very watchful about how the economy does in terms of being cashless, really cashless in the next 5 to 7 years. The company is very much dependent upon domestic business only. They do not have any international presence, obviously, because they see it's more a physical business. So for them to enter as a cash transferring company for any other sovereign apart from India would be a very big trust issue. So obviously, it would be a big barrier for them to even enter into any other country apart from India. Uh, the third one is increasing short-term debt. Like I said, the short-term debt is increasing every year, but I do not see that as becoming a very big problematic situation at this point. But I will be very cautious about how the short-term debt is being used in the operating of the company. If this is being used to finance something that is going to generate lower returns from the annual reports, then that would be a concerning situation, right? But that's far off. At this point, I'm not really worried, but yes, it is to be listed as one of the concerns at this point. Finally, after this, definitely I want to reveal the stock. This stock that I was talking about all this time is uh, Radiant Cash Management Services. The stock currently trades at about 100 rupees. Maybe it might have changed in a couple of days after I've looked at it, maybe on Thursday. But this particular stock is right now trading lower than its IPO value. It has gone IPO very recently, but it is trading lower than the IPO value, and it has good potential in my opinion. According to the simplistic analysis that I do, it is a very simplistic analysis. You will find analysis that goes way deeper into cash flows, future cash flows, and whatnot. But I think if the company is doing well today, if it is making enough profit margins for it to give me back something as equity holder, I'm happy with that to go ahead and make a small investment and see how it's doing for me, right? uh, if you have watched or if you have not watched a video of analyzing the Indian Google Maps, which is CE Info Systems, that is one stock that I think I probably had made a video sometime in July, and uh, obviously I am also a positive equity holder in it. Is that stock has moved from somewhere around uh, I think around 900, and it has now moved on to around 1800. So that's 100% return, doubling of money in less than 5 to 6 months, which is not a small thing. So for me personally, the simple things works the best. I don't do over analysis of any stock, which takes a lot of time, it takes a lot of my energy in terms of finalizing which list do I want to go with. So this definitely sits in the filters, and trading cash management is looking good in my opinion for my own investment strategy, fundamentally speaking. uh, if I have to sum up in terms of conclusions about what I see as the top four things in this particular stock, is excellent business model, near monopoly in the business, strong revenue, profits, and ROCE. Price is lower than the IPO, so you're getting something which is below what the other public has bought already, and it is now priced maybe fairer than what it was listed at. So that is a very positive sign for me when the fundamentals are strong and the price is below the IPO